Hello, everyone. Um, in this short meeting, I try to present a few of the indicators that I've been using. So okay, so you go to tradingview.com, and the very first thing that you need to pay attention is to see what you are using. So on the screen that I'm sharing, you see that I'm on 15 minutes. So there are currently 4 indicators. The easiest one to understand is the volume. You have to see the volume. And then I have a VWAP, which is the dotted line here. And then I have a EMA bundle. I use 9, 21, and 50. And recently I changed it to use 8. So you can actually go use the code and change it to 8, 21, 50. All right, so, and then you can actually customize it and change it. It should be changed to EMA 9. So because so this, I have to change it back to 8, right? You see this? This is the code. And then once you refresh, then you come back here and then you do, this is the setting. This is to hide it. So when you hide it, you don't see it, right? So it's really cool. And then you can hide all of them. You don't, so that you don't see all the 4 indicators that I'm using. But usually I unhide it for this presentation. So if you come back to the setting, so the EMA8 is still the green line, but it's using a solid line, whereas the bubble, the VWAP is a bubble using a dotted line. 21 is purple, EMA50 is white. So when you see this, as soon as you've done the coding, then here is like the EMA. Okay, right now on this uptrend, if you do a cross section, then you see that the 8 is over 21 and the 21 is over 50. And that's the time that everything lines up together. So it doesn't matter if, I think from 15 to 3 or 5 minutes are very similar, but you have to watch out if you try to increase it to 3 months, then you can't see anything. So if you do it like 30 minutes, yes, you can see it. But these things, you see like 30 days, 30 minutes is, I think is 2 weeks or 10 days. So you have to look at this graph. And then what I do is like, I try to stretch it, collapse it down. Then you come back, you look at the date on this one is like April the 26th to May 4. So it's about 7 days, I would say, like for this week. So 7 days, 30 minutes. 15 minutes is 5 days. So I go back to now. Once you are here, then you have to stretch it so that you see the difference between the days. There is a gap here. Thursday, Friday, gap up. And then, okay, so now this is done with the VWAP and the EMA. I use 8, 21, and 50. You can also add 200 if you are doing like 6 months. You have to look at not just daily, but you have to look at like monthly, weekly, and 15 minutes. That's the way. So there is a thing called free screening. So you look at 3 different time frame. So the intermediate time frame and the high time frame and the shortest time frame, I use 15 minutes. But when I use 15 minutes to trade, I look at 1 hour or 30 minutes. So 15 minutes is for me to trade. And then you go one level up 30 minutes or 1 hour. So once you go to 1 hours, then there is a really good story to tell. If the high time frame match the slower, I mean the intermediate time frame match the higher time frame, which is like 1 year or weekly. So people say weekly is very important because when you go weekly, the daily can fluctuate. It cannot tell you the whole pictures. So I would go to the triple screening later on, which is a really cool idea. So now, so we're done with the EMA, and the other one is the smart money concept. Now, the smart money concept has several things. I'm not going to go into detail. First is a break of structure. You go up, you go down, you go up, and it's EQH is equal high, and then you go down, and there is a change of structure and another of BOS, but the BOS is like you go up and you go down and you go up. So it can be crazy, but it's always in hindsight when you read it, it make all sense. You see this high and you break off structure and then you go shoot up. So this one is easy to understand, but not this guy. This guy, okay, if you look closely on the equal low, this is this point. And then there is a equal high. I don't think I see an example of equal high. EQH. Oh, okay. So this is change of character. So I would explain change of character later. Break of structure, equal high, equal low is simple to understand. It's like very plain. The change of character is like it turns direction. So break of structure, inside break of structure, you can have multiple change of character. For example, like this one, it goes up like equal high. You see this high, and then it goes down, right? So up and down. This is change of structure. But then like on this one, the break of structure, you go up, and this is free break of structure. Notice this break of structure is in green color. That means it's going up. The break of structure that is going green is going up. The break of structure that is going down is in red. So most of the break of structure that I see is going green, but there are break of structure that may be going, I don't see it. So let's see. See the equal low, change of character. Well, so far I don't see a break of structure that is going red. So consider break of structure is going up. So change of character usually going down. See this? All right, so now the most important thing is to understand what is the blue color and the burgundy, kind of like pinkish red color. So all these are zones of support and resistance. It's not necessary support and resistance. It's an area that they pick it as weak high. The weak high can become a point that you go through, and if you go through too much, then that means it's a continuation, and that would the trend is trending up and continue. But right now is the weak high is not showing it. It goes down, and remember, like there is a crossing of the 8 and the 21. So if you look at the MACD, the crossing is this one is this is different on the crossing, so it's not good. It goes down from here, so there's some crossing here. So the MACD not necessarily showing the exact crossing, so don't get nailed to the complete point, because there's no absolute. There's some lacking in every indicator. So the only thing that you can note that there's a fast line, leading line, and the slower leading the baseline. If the fast moving line is dropped below, it is red. It's going red. Like from here, You can see it from here. It goes down here, but it doesn't go down that much. You have to look at how the volume goes. You see from here to here, there's essentially no volume except the last line. And also the volume is high, is in the opening, right? You see the opening. So, okay, so now let's hide this one, the smart money concept. Remember that name, smart money concept. Now I take this out, then you don't see the break of structure, change of character, equal high, equal low, weak low, and strong low, weak high, weak high. So we remember this, you can hide it. So you see the weak high, strong low, break of structure, change of character, equal high, equal low. Got it, right? So most of the change of character is red, and all the break of structure is green. So you from down and then up. So inside the break of structure, you can have multiple of things. Equal high and equal low is important, like double top, but this is not double top. It's like within a lot of trends, like is the intermediate trend that lasts maybe 2 days. So from here, it is like April 28 to 29. So it's 2 days from here. All right, so I am going to hide this. This is the I, is to hide. Now, this is called volumetric Vidya, big beluga. I mean, it's very, very good one to use. You see that there is a trend. Going red is going down and then going up. So the slope of these things matters. And the slope of this one, especially this section, is flat. Then you know it's not a good, it's not a good to bet on. Try to sort. Is you can only sort for, don't expect too much, just like really short range of consolidation. Now low volume as well. You see this only at the line of opening and closing. So this one is 1 p.m. closing, and that has some traffic. People cover, people try to close out the trade and not hold it overnight. That's all the reasons, valid reason. And now you look at this graph, it's better. And this one, this is better than this one. And this is the best one, right? So you know when this one is green. So even here, I would not trade this section because of the volume, right? I would trade this one is up, and there is a expansion from like this guy from the 8 EMA over the 21 EMA and over the 50 EMA, and then it corresponds to some of even though there's some touching on the MACD. Now this I would not talk about the squeeze indicator. This is like a squeeze indicator. Oh, how come I don't? Okay, so this is TCV MTF squeeze indicator. Look at the source code. So MTF squeeze analyzer, I think it's indicator, is provided by Trade Zone. Okay, so you can look at the code. It's actually not, I mean, this one is 600 lines. It's not as complicated as you would imagine. The easiest to understand is the volumetric. So you look at the source code of volumetric. So it's like 200 lines, less than 200 lines. Now, this is the Pine script. You can add as many Pine script as you want. Now, another indicator that I like, I think I suggest in the volume is called volumetric support and resistance. Okay, so when you come to the screen, right? So you always have to whatever that you use, even my own indicator, I will have it all as a favorite. So you don't need to type. You come to favorite, and then you can find all the volumetric. One is support resistant, and the other one is the variable index dynamic. So, okay, so enough for this. So because I'm having two, usually I can use two, but because in this presentation, I want you guys to focus on what each one of them are doing. So now this is the volumetric support and resistance, right? You see this, and you see here, you see some support here. Now, many of the indicators show the same thing. Now, I go back to smart money concept. Notice there are resemblings, support, right? See, there's a resistance here, and then you break the resistance right at this point. See here, it's a cluster, and now on the weak high, there's also a break here, but not necessarily a strong one. Okay, you see, like for resistance, you can break. It does not mean that you won't drop to that point, but this one is like 1, 2 point on the wicks, right? So that is a resistance level. Now, if you go for 30 minutes, see, this is the same way. You have a point here, you have a point here, and that is the support and resistance level, which is easy to understand, right? You have a zone, weak high, and you have a zone of support, and it's right smack in the middle. So I would trade this guy, and I would not necessarily trade this one because it's just too much. And if you are in the first 30 minutes, you will say, oh, let's go up. So this is like 6:30 a.m. By the time that you are on 7, after half an hour, then you see this like it's doji. Doji is like a cross. It's like a wicks up and wicks down, and in the middle they pull each one, and then there's like a reversal pattern. And then you see like at 7:30, 1 hour after, you start going downhill. Of course, there is like 15 or this one again. So I would try not to trade in this zone. If you're doing building 30 to 45 days, that's okay. But if you are doing SPX on 0 to 5 DTE, don't go there. Like you're looking for troubles. All right, so I go through volumetric. So let's see one more indicator that is my favorite. Okay, so all I have been telling you are all directional, trend following indicators. So for some of it, it's reversal. It's called oscillator. So now this one, the lowest one, that panel, I can move it up. You see how I move up and down, right? So now this is the CCI is similar to RSI, but I prefer to use CCI. So once it is over, this is 100 line. The value is 200, and so this is 87. But there are times that you can go to 400 here. You see this line is at 400, it's overbought. The higher you go, the faster it drops. The range that is like safer to trade is from here to here because it go down. So what oscillator means is like, now it's overbought. You don't bet on uptrend. Okay, look for reversal, and this is exactly what you got. Okay, so here that once you go up, you don't bet on long. You waiting for it to go down. Then now it's time to bet on shorting. And once you short, you see like from 105, which is 100, and then go down to this green line is minus 100. So there in the middle is a zero line. You see my cost is right at 0. Now I'm 1266. So see the seal? You don't have a line, but it's a hidden line. So the red is 100. That means oversold. The green is oversold. Then that means it might bounce up. Like you see this? You go down here, don't sell at this point. Look for reversal, and then it comes up. See this? Once it go over, right? This one doesn't go all the way to zero. It's almost like touching the line. So it's okay. Remember I told you don't trade in flat trend. Actually, the volume is not bad. I change it back to 15 minutes. The volume is not that nice. Like, but I would not trade on this volume. It's just too scary. So so oscillator is harder to follow because even at this point you get down to minus 100. That is oversold area. You come back up, but you come back down. So the easier to trade is from this to here, or from here. Even this one is like the CCI. There are times that it doesn't work. See, this one is over 100, but it's going down, whereas this guy is going up. It's just the opposite. So here you go up, down. This one is true. It goes up over the 100 point. You go to 225, and then you go back down. So from this point backing down, then you actually go down to minus 102. After you get to 102, do not bet further because the green line means it's after the green line is there's a reversal. So the safe zone to trade is in the middle. So it's going down or you're going up. So you see this going up from minus 100 to up to 100. That is the safest zone. But you use CCI not independently. You use CCI together with trend following to see. You use CCI most of the time is how to exit, when to exit. So you use the CCI to say like, it's about time that I make enough that I just get out. Okay, so now to go back one more. So now this is a little bit different. It's my alert. So I'm gonna hide the other one. Okay, so if you see my alert is like it try to go a bull, it means do a put credit spread. Bull is put credit spread. If it's bear like this, it means to do a call credit spread, right? So when you do the long to go put credit spread, or you go to short, which is the call credit spread, at that time you have to figure out your stop loss. I set it for 175% of the premium. Stop loss target profit is probably like 50% or lower. It depends on the data. Like I trade 2 to 5 DTE, so it's not necessarily the same. All right, so I think that's about for the indicator so far. And next, I can talk in length about all the indicator that I use. I don't recommend to use more than 4 of them. Like try to use 3 to 5. So I like indicator that is not on the chart itself. I like indicator that is like on different panel. So independently, they show you some picture. Like I use MACD. You have to understand what MACD, understand what all the setting is. So when I go to MACD, I go for, how do I see the, okay, you go to MACD, right? You go to setting. So you have style. Okay, so they don't have they don't have good setting. So I thought I see. Okay, I explain it back to you because I can always see the code, but that was the point. You would be hard for me to explain everything. So there's the EMA. Now, okay, very simple to understand. So it has like a fast moving line. The fast link is using 12, slow link is using 26. The signal is at 9. So you see only two lines here. There's a fast and a slow, but there's a signal. So now you can actually try to use it, MACD, signal line, and histogram. So so you see like the green line and also this one, which is the okay, and then you have the histogram, which is the histogram is, you see this, the green and the red, right? So what it means is this. So let's expand this. Okay, you guys can see it, right? So this is going down. So the fast moving and the slow moving and the signal, which is this line, the signal line supposed to be based at 0, and then you have negative signal and positive signal. Okay, the signal is like 12. So once again, you go to the code, right? Simple, right? The fast length, which is the green line, is 12. The slow length, which is the orange, 26. The signal smoothing line is 9, and that is the volume signified by the histogram. All right, so I think that's about it. I would talk about all the indicator in more detail, but you guys have to give me an idea that you want to explain certain indicator. I may not know all the indicator. The best technical analysis are done without all this, meaning you just need to look at the green bar, the candlestick, and you define what you want to see. Like for example, like support and resistance, right? So I enable this. Okay, and then my things, I have to take it off, not to confuse you. Okay, so support, resistance. This is support, this is resistance. Resistance doesn't mean that it cannot be broken. It it depends on how resistant, how strong that resistance level is. So once it's broken, you can go back there. So it's almost like a magnetic point. When you have a resistance and support level, they go back. So there is a saying that why do we have support and resistance? It's coming from human memory. You got burned at some point, and you get stop loss at some point. You like to trade, the stop loss is there. So you're always a magnet to go back to the same point. It's really weird. So big institution, dealers, market makers, they actually wait at that zone to see traffic on that zone. So try to be careful. All right, so I have to stop the meeting. Um, okay, so now, oh, okay, so I have stopped the sharing and then stop the recording and the recording.